Good weekend, all. Ira Epstein with your weekend edition of your Spider ETF stock market wrap-up. And this wrap-up is for Friday, the 11th of August, 2023. So this was the week of the CPI, the PPI reports. We saw them. You can see that the core numbers are not dropping. They are just stubbornly sticking where they're at. This is important. What else is happening is that the arguments come out. You see all the people coming out, oh, the Fed is going to have to go flat now. No, the Fed can still got to go up in order to fight this. It doesn't matter. Why is Ira saying that? Who is that Ira character? Let me tell you why it doesn't matter. You're not paying attention to the obvious. Do you watch any of the financial TV shows? They show you the 2, 10, and the 30-year all day with the 5-year. So you get that all day. Which way are those yields going? Which way are the futures going? Futures are falling. Yields are going up right across the whole yield curve. The market's doing the Fed's job for it. And by the time we get to the September period, you'll have had, remember, this is August 11th. September 20th is when that comes in. You're going to get the whole month of August data in front of you and wherever the real rates are 2/3 of the way through September. So if you keep racing up these rates, I can make the argument the Fed doesn't have to do very much because the real rates are going to keep climbing, and that's going to have the same negative impact on the market that you're having now. Do you see a difference in the market? Other than the Dow, most of the stock indices act like they want to come down. What else are you seeing? This was the week that took the premiums and taking the premium out of the AI stocks. So there's a rotation that is going on, and it's getting very ugly. NVIDIA has just come back from what, the 460, 470 level, 408, 406. These are big drops in this market. You got to pay attention to all that. When we look at Netflix, drifting sideways, okay? But when you look at the swing line on it, the swing line is this brown line. I created this I'm thinking this out loud, 25 years ago now. I remember my son was 13, he's 38 at this point. I know he'll be mad at me giving his age, but I promised that he could go anywhere, sit down with people, look at a chart, take out this, draw these lines, and tell the people what the trend of the market is, and tell them what the risk associated with the trend is, not where the market is going. The definition of a downtrend, and I taught him this, is when you're making lower highs and lower lows. You have to have some way to measure it, though. Visually, if I come back on this chart, let's see if I can do that right here. I'm going to do it on this way. You don't see it the same way. If you do, you've got magical eyes. Where you see it is as soon as you put it up like that. And yes, I moved it up so you can see it clearer, but that's what it's doing. Then I start filtering it. The first thing I put on the swing line is moving averages. And I look to see where all of them are. The ones that I plot the most, there's really 4 major ones that I plot. I will plot the 50-day. I don't want everything on this chart. It gets too many lines. The 100, the 200, and the 18. You may use the 20, the 21 instead of the 18. I don't care. It doesn't matter. And what's been happening here is the 18 is moving up towards the 200 and price is coming down. You may get what's called a kiss. What is a kiss? It's when the 18 brushes the 200. Instead of getting over it, it turns back down because price keeps falling. And then you open up the avenue to come back as low as the 365. I'm not saying it has to happen. I'm giving you the what ifs. Where's the first support in this market? It's crystal clear. It's the 200 down to the 18 at this point. The trend is down, the bias is up. Why is the bias up? Because the market is over the 18-week average of closes. I need a spot on a chart to decide what is a filter on other things. And what I learned the hard way over decades of this now has been when the market is over the red line, the 18, I'm looking for potential buy signals. When it's under it, I'm looking for potential sells. Yes, you can get chopped up as the market's looking for its direction back and forth. That's pretty easy to see because the Bollinger Bands, these black lines, typically narrow in when that is occurring. So you don't have that right here. You have a market that ran the Bollinger Band to a new high on Netflix, right? You kept hitting it, get up to it and thrown back, and suddenly the market is going, I'm exhausted. I've taken this market up in a short order. Now, remember what I'm saying here, short order. Let's go back, for example, to March. You were sitting here at 300. You just got up in this market to what, the 470 level? Come on. There's a point where markets take breathers. And momentum is turned down. So as the stochastic momentum turns down, you lost the bullish embedded reading. If you haven't taken my course on how to do this, shame on you. This is summer. Learn. Over a weekend, you will learn this. It takes you, I swear, you get it in 3 hours. And you start saying, and I'll keep reinforcing it in the mornings when you're coming to my videos, because that's included in the course. Ira said we lost the embedded reading. Let me see where that happened, Ira. I'm talking third person again. My wife thinks I'm nuts. But right here, you're still embedded. Now you lose it. This number's under 79. Unless it immediately gets back over 80, both numbers, that says you're going to go down probably to the closest main moving average. You do it right away in the chart. You don't bounce back much. You don't come for a new high. You've already hit your downside targets. Now you've just got momentum down, the trend down, the bias up. The market's in a corrective mode. I'm not saying a bear mode. It is not the word I'm using, because as long as you stay over the 18-week average, I have a bullish bias. Coinbase. Overbought, giving a correction. You got up and over the band. What are the odds of staying over or under the black band on the chart? Do you know? 5% of the time total. Therefore, I'm always asking people, why are you selling here? Why not wait and see if you get a bounce? Do whatever you want to do. Why are you buying there? Why not wait until the market gets back under the band? And the reason you will say, it's Ira, it's going to run. For the one time it does it, or the 5 times it does it out of 100, who cares? It's only going to do it 5% of the time. And I didn't say it's going to run. I said it'll be outside of the band 5%. In addition, you got a big moving average waiting to hurt you there. So again, I have a market that's in a corrective mode. It's not trending. It's got upside bias. It might pull back to the 18-week average to figure out what to do. KRE, overbought market, fighting at the upper Bollinger Band. I'm going to repeat, only 5% of the time do you stay out of the band. And the trend is up, the bias is up, but you're overbought. Support waiting for the market at 42.63, about $5 lower. Doesn't have to get there, but that's where the support is. Then we get to MCHI. Everything I hear about China is terrible in terms of fundamentals. I mean, terrible. Over the weekends, when they typically do something to surprise the markets, we'll see if they do it, because their property sector needs massive amount of help. Just think, you're a Chinese citizen, you want to go out and buy a house, and you're hearing now about the 6th largest property developer, can't meet payments. Do you want to give them all their money? Remember, in China, when you buy a home, you have to give all the money up front. Then they build the house or the apartment, whatever. To somebody that can't pay their debt, what if they go belly up? When are you going to get that? So you tell me how the Chinese government gets around that without them stepping in and guaranteeing and doing something. We saw it before in Evergreen. That had a bad taste. Now you're right back with this one. Forget it. That's why I think that they have serious, serious issues. The president's got so many, I'm talking our president, has so many of the facts wrong when he talks about how they're growing, what they're doing, 2% growth. They're not going to have 2% GDP this year. They're going to have 5% or so in that ballpark. But it's not 8, it's not 9. And we don't know what the real numbers are. But believe me, I don't know where he comes up with some of the things. In any case, you're embedded in XLI. I am so confused. You're telling me that the industrial sector in America is coming alive because it's got the embedded reading. Okay. I'm a chartist. Take the name off the chart. That's the first thing you do. Until that red line is under 79, I contend this break's being bought by the pros. looking for the market to get back up to the Bollinger Band, get a reading under 79, and I think you're coming back down here. In the energy sector, you're up at the resistance point. I'm a big bull on this market, and now I've got to tell clients, take money off the table. Why? You're going to play that the market's going to blow up and just keep going over the Bollinger Band, and I want to take money off. Now you can take off it in chunks. The beauty of trading, unlike futures, is you can buy 100, 1,000, whatever shares and peel shares off. Futures contracts, you got to take off the whole contract. That doesn't mean you can't have multiple contracts, but they get very expensive very fast. That's what I think the pros are doing. I think they're now starting a liquidation phase, not bearish phase, liquidation. The dollar, I'm bullish on the dollar. If you keep these rates going higher, how does anybody compete with us? Our economy is strong. Our labor market and service sectors are strong. You saw that in the PPI. What drove the PPI up now? Service sector again. Okay, I was right. I wrote about it in today's newsletter, all over it. And as long as that's going on, how can you be bearish the dollar? It's hard. So the dollar had a downtrend, went down, challenged the support area, got right back over the 18-week average. So the bias is up, trend is down. And if you take this out, you negate the downtrend and possible target wherever that upper band is. In the gold market, I keep telling you, the headwind for all the metals, not just gold. A strong dollar is not bullish to metal markets right now. The cost of production, everything they've got to do, I'd be very cautious here. All you've done is rallied back recently to the 18-week average fail, but you are oversold. Oversold, in my opinion, when you get a reading like that, doesn't tell me go out and deploy new money on the short side. Just the opposite. Either don't trade or take money if you are short off the market. GDX, the same thing. Now you're getting very oversold. No, I wouldn't be telling a client to deploy new money. Tesla just lost its embedded reading. Okay, when? So let's go back here and see what the target is on this. And if we come here, still embedded, loses it this week. Nope, loses it right here. So this week on the 4th, the market finished at 250.49. Got that? And you were underneath already the 100-week, so you've opened the door up by doing that for the 18-week moving average of closes. That's my target. Doesn't mean I'll be right, but I think I will before you get up to a new high. You're going to see AMC lost a lot of share value after the close today. Those 8 shares got the judge's permission to go ahead. So now what's happened, you have 2 classes of stock. They're going to end up rolling those shares into the AMC. In the end, you watch. They're going to take this stock after they roll everything in, and they're going to have a reverse stock split. I don't know for how much. I don't know if it's 2 for 1, 3 for 1. They're going to jam the price of this up, and then they're going to float more shares. That's what I think is going to happen. Debt, they'll do something with it to get more money in their coffer. It was a win day, even though the shares of AMC itself are in the aftermarket under $4. Apple getting a correction here. Now people are saying, and I'm reading it over and over, should we really be buying something 32 to 37 times earnings? That's a common theme I'm hearing. And people are saying, I don't think that's the best. I was reading today out of Alpha, a big report explaining how this stock, in order to get good values, got to fall rather hard from this level. You know, the ideal buy for them, I think it was $125, because with a growth of 7, 8, 9% a year, what that gives you back in dividends and all. Well, I think that's whistling. I mean, you're saying you're going to go back to the right through here, the 200-week average. I am not making that statement, but this chart is not bullish, nor has it entered a bear phase. It's in a correction. Why? You got a higher high and lower low as a chartist. In Google, still bullish, but overbought and trying to embed, or did it embed? Both numbers were over 80 in the close of business today. Both over 80 yesterday on the close of business, but the day before they weren't. So you're in an important number. If you take out Thursday's low, be careful. You're probably going to get back before you know it to that 18-day average and not in bed. So be careful with that. That's my news, by the way. So that's how I look at things and see where they're at. I want to remind you that over the weekend, why not take advantage of all the free offers we have? If you go to our website, iraepstein.com, you can also move your cursor to the top right here. There'll be an icon for you. You get to choose. I'm showing you 6 of them. It keeps going down with all the free offers. Charts, access to my written research for a couple of weeks, access to the videos that we do for that, the free courses on pivot points, the Arun indicator, the indicators that we put together in brochures for you and give you written examples and show you fabulous charts, trading indicators volumes 1 and 2, all yours for free. You click on the blue, just put in your name, your email, fill out the form right there, and away it goes. We'll have it to you first business day next week. Is that simple enough? Take advantage. I'm Ira Epstein. I'll see you all come Monday.